Aloha folks, thank you so much for checking out this video. If you're new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving dividends the past 33 years without a reduction, as well as growing dividends of 22% per year the last 20 years. So if you're interested in knowing a little bit more about this company, stay tuned, check out this video, do me a favor and hit that like button. If you are new to the channel, just want to say aloha, welcome to the channel where we learn about great dividend companies to invest on. So if that's something you're interested, definitely hit that subscribe button, hit that notification bell so you don't miss out on these videos that I put out. As always, please remember it's not financial advice. This is just me sharing. With that said, let's take a look at this company. This company is called Texas Instrument. The ticker symbol is TXN. Basically, it is a company that makes chips, semiconductors. So you can see from the website, you can see a lot of it. So they have, our passion is create a better world for making electronics more affordable through semiconductors. So very popular company in my opinion. They have about 90% of shipping semiconductors products considered green. That meets low halogen industrial requirements. So now if we look a little bit more towards simply safe dividend, based on their dividend safety score, they rate it as a 90, which is very safe. For this company, the dividend yield is 2.52. Market cap is about 68 billion, which is a mega cap. Looking over the key metrics, you can see payout ratio is 50%, which is edging high for semiconductor firms. During the recession, they have increased their dividends in the 07-09. Looking at some of the dividend growth, you can see the last 20 years, which they've been growing 22% per year, which is very fast. Last 5 years, 21%, which is also very fast, and then the latest is 13%. As you can see from the chart, it has been kind of steady, and then after 2012, it's just kind of going up, which is great. Dividend growth streak of 18 years consecutively, and 30 years without a reduction. So pretty solid stats. Your payout details would be quarterly in the months of February, May, August, and November. The annual payout would be $4.60. Ex-dividend day would have been January 28, which was passed, and then you get your payout, which is February 7. Now looking at the financials, you can see earnings payout ratio 49%, free cash flow payout ratio is about 62%. Now looking down to the return on invested capital, so you could see 42%, and then you return on equity, which is 69%. Now if we look further more into simply safe dividend, they get a little bit of more information in there. So you can see some of their products. You can see embedded chips, you got all those. Analog chips is by far the company's largest and most profitable business. Their embedded chips is the fast growing category. So they have a little bit more information on this one. Now looking down to some of the risk, if you're considering possibly investing in this, we look down through some of the information. I'll go a little bit more, and here's some of the whys we're allocating per capita, and here's the key risks. You can see semiconductor industry is very cyclical, meaning the sales and earnings are volatile over time. And then one also thing to remember is that Texas Instrument has a lot of large rivals. So as you can see from here, these are some of the rivals: Broadcom, Microchip Tech, Maxim Integrated Products, Analog Devices. So just some of the background information for you. Now if we swing to tip ranks at the time of this video, it's a 182. Their rating is moderate buy based on 21. You have 8 buy, 11 holds, and 2 sell. Target price is at 207 with 11% upside. Then you got your high price of 240, average of 203, and then your low of 170. Now, if we swing further to some of the analysis forecast, you can see a lot of them is a bunch of holds majority. Then you got your buys and sells. But if you look down stuff, a lot of it is mostly holds and some buys and some holds. Now, so we swing to CNN Business based on their stock price forecast, about a high of 240, a median 189, and a low of 150. And then looking at their recommendations, you got 11 buys, 15 holds, and 1 outperforming. You got your 4 sells. Now, if we look at Yahoo Finance, you can see a little bit more some of the details. You can see PE ratio is 22. Now, if you look at this one, you see it's kind of like just stagnant for a while. It's slowly getting up there. Performance outlook, long term is a little bit bearish, short term is bullish. Now, if we swing by to some of the earnings, you can see 4 beats the past quarters. Financials, you can see the revenue has been going up from 2020 to 2021. The revenue is 18 billion, earnings is 7 billion. Looking a little bit more to the trends, you can see mixture of holds, buys, and strong buys. Recommend rating is between a buy and a hold, and then your price target is pretty much lower than the average of 189. At the time of this video is 182. Now let's switch over to bar chart based on their price target. You got a similar one with a high of 240, a mean of 204, and then a low of 175. If you look at the rating, you can see it's based on 17 ratings, they're moderate buy. So 3 months is pretty much the same. And then if you look at the breakdown, it's about 11 holds, 1 strong buy, and 5 strong buy, 1 strong sell, and then 11 holds. Now, if we look a little bit more for the fundamentals, you can see price to book is about 12%. Book value per share is 14. Looking at the growth return, you can see 1-year return would be 1%, 3-year return is 71%, 5-year return is about 126, and then you got your dividends over here. So if you're wondering when exactly are you going to get paid, you can see the trend in here. So you can see January, the 10th, the 7th, and the 4th. So you can see it's pretty much towards the end, as you can see from this chart. So all right, now swinging over to Simply Wall Street based on their calculations of share price versus fair value, they rated as 20% undervalued. So their fair price based on their calculations about 228. Currently at the time of this video is about 182. So if we go a little bit more to the company overview, you can see snowflake analysis, solid track record with excellent balance sheet, and pays a dividend. So here is some of the great things about it. Pays a really reliable dividend. Earnings have grown 20%. Earnings are forecast to grow 4% per year, and it's trading 20% below our estimated fair value. And then you got your insider selling over the last 3 months. Now, if we swing over to Robinhood, for today it was up only 1%. For the week, it's up 4%. For the month, it's up 8%. For 3 months, it's down -3%. And then for a year, it's up 0.2%. And then for 5 years, it's up 122%. So I like this stock. Oh wait, hold on. So let's take a look at the analysis. You can see it's a mixture of holds and buys, and then you got your fair value based on Robinhood. It's about 172. So my conclusion on this one, I like the stock. It's a great company to invest on. However, I think for me, with the things going on right now, I want to buy it in a cheaper price, in my opinion. I don't know if I'm going to get it, but I think I'm going to wait. I'm not in a hurry to invest in a company like this. For me, I rather like Broadcom, in my opinion. But that's just me. But if you're going to invest on this, I think it's a solid one. And in my opinion. Again, it's not financial advice, but definitely a great company to invest on if that is something you're looking at. But also make sure you continue to do your research, do your due diligence, make sure this is a company that you are really sold in investing on. So with that said, all right guys, thank you so much for watching. Please like and subscribe if you haven't done so. Hit that notification bell. Also check out some of the videos that I have in there if you want to learn a little bit more of other companies. Please be safe out there guys. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.